Hello, ladies and gentlemen. My name is Greg Michalowski with ForexLive.com, and this is going to be a Google Hangout with myself and Adam Button. Before we get started, let me remind everybody that trading foreign exchange carries a high level of risk that may not be suitable for all investors. In addition to that, leverage creates additional risk and loss exposure, so be sure to apply your risk capital measures before trading. So let's get into what the ECB interest rate decision here today and all the implications in the market. So I'm going to just give the mic over to Adam here. Adam, why don't you tell us about the decision and what your feelings are in regard to it?
Okay, quick recap. $60 billion a month starting in March of this year will run through September 2016. That's a total of 1.14 trillion euros. Could go extend farther than that. It will go at least until September. Left that idea open that we could go longer, and that's the key takeaway. Also drop rates on the Teltros. The Teltros haven't been that successful. So overall, this was more than expected, even from the leak yesterday. That would have topped out around 1 trillion. This is 1.14, and there was speculation that could be wound down. So it's dovish. We saw that in the market, but it's a very, very dicey market. What are you seeing, Greg?
From a technical perspective, Adam, we're seeing more of a selling pressure here in the market. Obviously, which the euro versus U.S. dollar. Oops, let me do that to get to our chart here. Seeing the that's a dollar Swiss. Hold on, let's get to our chart. There we go. We saw the euro move sharply to the downside, falling below the 100-hour moving average trend line in the process. This is going to be our key resistance level here going forward. Stay below that level, the bears remain in control. Another level here to watch from a technical perspective is the 115.39 level. That was our low for the week. So stay below that level, and that also is a little bit more bearish for the pair. We do have this low, obviously, that's sticking out like a sore thumb here from last week's trading around the 114.59 level, and when the market sees that, it's obvious to everyone's eye. We found the buyers down there against it because risk can be defined and limited against that level. So we are seeing a little bit of a rebound here in the last few minutes of trading off the 5-minute chart. Remember that 115.35 level also represents the 38.2% retracement of the day's trading range. So we have a couple of reasons why that level should hold, or it should find some sellers on any sort of rebound to the upside. So let me ask you this: do you expect that, Adam, that Draghi was a little bit more concerned about the state of the economy going forward? How do you think? Do you think that this program may lead to further that we finally get to the point where the EU economy starts to rebound at some point or another? Or how long do you think that might take? Are we still in a bearish situation for the euro?
Yeah, great idea. I mean, I think there's no hint. They said the economy is struggling. Obviously, that's how they justified it. But they said this will help. And the ECB's mode, until it's under overwhelming pressure, is to do this and then say wait and see. We're going to wait and see what happens, and that's where they're at right now. And give them credit, it won't even start until March, so there won't be anything in the immediate pipeline. There probably won't even be much chatter, although you can't rule that out if economic numbers continue to disappoint in Europe. This is a very, very powerful program. The euro is on its knees. We're back below 115 again. I like that 114, I think 60 level you highlighted. We'll see the euro spill again, I think, if it goes below that. There is no reason to buy euros here. Now, the one reason that could come up still today is the response from the Germans. The Bundesbank is the key opponent to QE. We've had some German banking associations and other associations already speak out against it, saying it will only have a marginal improvement. The money will flow into markets, which is key. They said the money will flow into markets, not into the real economy. But if the German Bundesbank comes out and somehow tries to cripple this program or undermine this program, now that's a very low risk probability, maybe 5%, probably even less than 5%, then you could see a major squeeze higher in the euro. So that's what we're going to be watching out for in the next hour, 2, 3, or even in the next day or so. But overall, the real economy is weak. This won't provide any immediate help, but you might see what you saw in the U.S. Stocks start to turn. I mean, it's very good news for the stock markets. They're all green. They started the day red. The bond markets are rallying in the periphery and in the core Europe. So very good news there. Where do we go from here technically?
Oh, from a technical perspective, I think staying below that 115.39 level is going to be what we're going to be looking for on the top side, and that 100-hour moving average around the 115.82 or so level. That may also come in play from a technical perspective. Well, what we've seen over the last, every time the market breaks through a level here, I commented about the 117.43 level and the 116.39 level. The market's been using those levels as ceilings and to keep the price below it. So I look at that 100-hour moving average as a key ceiling now. What was once support now becomes resistance, and so that's how I see it from a technical perspective. Can you go through a little bit of the details of how the program is going to take place? Is the central bank going to be doing the purchases, or are the individual member nations of the EU, going to do their own individual, and how might that be distributed?
Yeah, that's a very important question, and that's where we saw the first squeeze in the euro. Sorry about the background noise, it's just a trading floor here. And we saw the squeeze, we saw the fall through down to 115, and then it squeezed back up when they said it will be the national central banks doing the buying, and ECB will be overseeing the program. Essentially, when we don't have the details on that, we're going to get them in a few hours in a technical note, but the national central banks are doing the buying, and it will be distributed. It's based on essentially on GDP. There's a formula the ECB has that they use for other assets, and it essentially equates to GDP. So that was widely expected. The way it will be managed was largely expected because it limits some of the risks to within the central banks. They're also buying some agency debt from European agencies. That equates to about 12%. And that it may be important going forward if they wish to do more lending with those facilities, issue more bonds for infrastructure projects within Europe or inter-country projects, large infrastructure projects, which are the sort of things that can really start to turn around the Eurozone economy. But at the same time, I mean, governments are going to have the incentive to spend right now. Now, you can argue that's a bad thing, and it probably is in the long term, but in the short term, you have the French government, for instance, borrowing at less than 1%, Germans 10 years at 0.45, so why not a little bit of spending right now? You have the economy in a very poor spot. If it's well directed, with things like infrastructure, not necessarily new social spending, welfare programs, the things everybody criticizes Europe about. But overall, it looks very good. And like you said, on the technical levels, that was interesting. You had yesterday 116.40. I think when it hit that, you talked a lot about it, and it popped up to 116.80 on that squeeze. And now I think one of the levels I'm looking at, you had it up on your chart earlier, is Euro Swiss. I mean, you see that squeeze yesterday, you have it up there. It was right at 116.40, which is a level you clearly defined. It was those old highs, but it's that 2010 or 2005 high or low, and so it was a nice squeeze above that yesterday, and it was the top again today. And one we're looking at right now, if you look at a bit of a shorter term, is Euro Swissy. We got a nice bounce from 89.50. I mean, people are a little bit gun shy in Euro Swiss, and brokers have certainly hiked margins, but we basically matched yesterday's low and have popped back up. So that's one that's on my screen. I think we might have just gotten below it, depending on your broker, depending on the quote there, but it was very close, and we had a bounce. And there is, for me, on the trading take, there's no reason to buy euros here. I mean, you're going to get squeezes. It's everybody's short already, so you always have the potential to see these bounces in the euro. But I like the downside, and selling any bounce, and that includes Euro Swiss. What do you think?
Yeah, I agree. I mean, I think that seems to be the case here. In fact, Draghi said, reminded everybody that the the disparity between economies, between the the U.S. obviously and the eurozone, and how that spread is widening as far as the economies go. Kind of talking down the euro himself. I think that's what he's intended to do, and the euro and the traders keep on giving into that idea. Obviously, and we're seeing that price move lower. It looks like we just made new lows. Tell us about Greece. Greece involvement. Are they going to be involved in this at the start?
Yeah, they did a nice way of finessing that. They said they'll only be buying investment grade bonds, which doesn't single out Greece, but of course their bonds are junk rated, so that's excluded for now. Draghi did say they could include them later, so that's on the table. So I think politically that's not a bad move. Greek election, obviously the huge risk event in the future, could most likely be a negative for the euro. But Syriza's up 3.5, 4 points. Market gets scared of change, or voters get scared of change on voting day often. So if there's a surprise there, it could be good news for the euro, in my opinion. Another one just back on the text, keep things live. Euro yen just busting down to a 3-month low. Took out the January lows just as we spoke here, Greg. So that's maybe one that we can finish with. And the euro is a crowded trade. Maybe euro yen is a little bit less crowded. So maybe euro sterling as well is another one if you want to stay away from the dollar crosses, which are a bit crowded at the moment. There you go.
Yeah, here we go. Yeah, the euro yen here on the hourly chart. Like the euro versus U.S. dollar, we fell below that 100-hour moving average, above it earlier in the day, but then moved lower, and as you say, making our way to new lows here for the euro yen. I have it on the daily chart, a trend line here, which really originated here. I sometimes like to keep those old trend lines in. At this point right here, we were breaking above the 100-day moving average. You can see how the 100-day moving average kind of got involved in the market here, but also this trend line, and we came down, ironically or maybe not, earlier this month, down tested that old trend line and bounced off, and now we're back down again, testing it again. We have this low going back to October of 2014, which is also in play and looking toward that level. So that's how the euro yen is looking from a technical perspective at the moment as well. So you have any closing thoughts here, Adam, that you might want to share with our viewers?
Yeah. Just I guess we got one little question popping in the Q&A. Okay. Good for stocks on the back foot. I think it is good for stocks in Europe, but you have money flowing out of Europe at the same time. So maybe I think 110 is the spot where I'd like to buy European stocks, and we'll have a bond around them. But if you're looking for the long term, these are some nice levels, and QE, as we've seen in the past, finds its way into stocks. The euro just continuing to collapse here as we talk. So 114.60. So some interesting levels to watch, and we'll keep it live at ForexLive, and glad we could do this. Thanks, Greg.
All right, thank you, Adam. Thank you, Adam. Thank you, people out there. We'll be back with another special report at some point or another, so pay attention to our website at forexlive.com. Until next time, Greg Michalowski and Adam Button saying so long.